We paid a lawyer 30 grand. I had 25K EMD down. We had only 2 weeks left to actually raise the capital, and I couldn't pull it off. So I ended up losing all the money that I paid the lawyer plus my EMD.
What's been some of the biggest learning lessons from the early startup days?
You constantly just have to be okay with pivoting and iterating. Probably we're only aware of the first concept of fractional, where we were actually more focused on the end consumer and not the operator. We are building a platform that allows operators to raise capital and pull together capital from anyone in their network.
How do people build trust with people when there's so much scamming that goes online?
Your first touch point with someone shouldn't be asking them for money, shouldn't be giving them your money either.
If there's something else that you can build in the future, what would it be? Imagine buying real estate with your friends or even complete strangers without the stress, the paperwork, or even the six-figure down payment. That's exactly what Stella Han, co-founder and CEO of Fractional, is doing. Her platform makes it possible for anyone to invest in real estate. So if you are struggling to raise capital or fund your next business venture, this is your episode. So without further ado, I'd like to introduce the queen herself of raising capital, Stella Han. Stella, welcome to the show.
What's up, Lorenzo? Thanks for having me. So excited for this chat.
Yeah, of course. Super happy to have you on. So really quick, I just want to know, at this point since Fractional's conception, how much has been funded through the platform?
Well, we've done a few thousand deals, and we've helped operators pool together over $400 million of capital from people in their network to go pursue whatever big vision that they have in mind.
Damn, 400 million.
That's right.
That's
400
crazy.
million.
How long has the company been around for?
Almost 5 years now. I honestly have to keep upping that number every time I talk to someone, which blows my mind a little bit too, but it's honestly been such an exciting journey, and I'm a very active real estate investor myself, so sometimes I almost feel like I get to do a little bit of double dipping, just seeing all the cool projects that people are hosting, and whenever there's something great, I'm like, hey, can I get in on the project? I also want to be part of the club, so we are rocking and rolling.
Nice. So really quick, just tell the listeners what Fractional is, because really quickly, I don't know if a lot of people really know what the platform is itself.
Yeah, absolutely. So Fractional, we are building a platform that allows operators to raise capital and pull together capital from anyone in their network. Doesn't matter if they're accredited, unaccredited, seriously anyone, without needing to go through all the crazy red tape and costs that traditionally come from setting up a syndication or a fund. And I'm sure, you've experienced a lot of this pain yourself. I certainly got absolutely obliterated my first time raising capital, which is, one of the many inspirations for why we created Fractional as a company. Traditionally, when you are going out there, you're scaling, you need other people's money. There's only been two options in the past. It's, go start a syndication or a fund. Both of those are very complex and expensive. You're spending 30 grand right off the top, paying a securities attorney to go create these 100-page long documents that nobody knows has to read. And there's restrictions around who you can raise money from. A lot of times it's for rich, accredited people only. So just so much red tape, a lot of, gatekeeping, a lot of bottlenecks. And we saw a massive opportunity in this legal structure called an investment club, which has been very popular, especially I think within the tech circle, where people would pool money together and go invest in stocks, invest in crypto, and even bank on the next billion-dollar unicorn startup that they think is out here. And with an investment club, because everyone is actively participating and looking at deals and doing underwriting, it's actually not considered a security at all by the SEC. So all of a sudden, you don't have to deal with all that chaos I mentioned, right, with a syndication or a fund. And no one really built the rails for doing that in real estate, which was why we decided to go build the technology and infrastructure to help people really open the doors when it comes to capital raising and involving a larger network of people to participate with them.
Yeah, that's one thing I didn't realize. I think most people don't realize when you're raising money, there's all the different things like 506B or 506C if you're going to do a fund, and all these different red tape and gatekeeping things, like you said. Like you can only raise from a certain amount of accredited investors if you're doing a C. You can't advertise to the public. It's got to be friends or family. So I love that Fractional makes it so easily accessible for the average person, because, as you know, real estate investing is so hard to do, especially when you're trying to think about raising $100,000, $200,000. So what's I just want to know like just everything about fractional. So what's the minimum that you need to do it? What's the minimum age? Like all the different things to, if I want to get started on fractional today.
Yeah, I mean, for us right now, we are very focused on the operators. So the people that, are very seasoned investors, they're scaling, they're trying to, bring in their network, unlock a larger pool of capital. So really where we've seen the best fit from an operator's perspective, the people that are raising the money is, I think raising at least $250,000 is probably the lowest to go where it's a good use of everyone's time, right? If you're trying to pull together capital from everyone. And then really where we've seen the investment club model, the sweet spot is anything I think below $10 million. Once a deal becomes too large, then there does become a question of, is this even realistic to have that active participation of people working together as a group, right? Like if you're buying a 500 unit multifamily, I think it's a little bit difficult, right? To have people be involved in, the underwriting, the due diligence and all of those things. So that's why, for us, I think that 250 to $10 million mark is a really great spot for operators that are looking to raise capital. And then on the flip side, you have the end investor, right? Those are the people that an operator is actually bringing into their club on fractional and, having them involved. So then that becomes a separate question where it's like, what is a good minimum check size that you should have in your raise? So generally on the platform, our floor is $10,000, but that is, completely adjustable for the operator. I think a lot of times people don't want too many cooks in the kitchen, right? If you're raising $5 million, you probably don't want to have a 10,000 checks minimum check size, right? So that's definitely something that the operator gets to decide. And then something that's pretty interesting is the legal maximum number of people you can have in a club is 99 people. So that's also just another piece where, you can do a little bit of math and just figure out, well, if I wanted to have as many people as possible, which is 99, well, depending on how much capital I'm raising, there probably is some, bare minimum floor that you have to hit in order to still just stay within that legal requirement.
Mm-hmm. And is there like what kind of returns are people expecting to see from this? I mean, I'm sure it depends on the asset class and all that thing, but like, is it just typical? I mean, IRR a return of 15 to 20%, or some people seeing a lot more? Do you see less? Like, what's the typical returns that people see on?
It is such a broad range. And to your point, I think it really depends on the asset class, the strategy, people's risk tolerance. I mean, as a platform, we're asset agnostic. So people are putting all sorts of things on here, which is why it's so interesting for me personally just to see the types of deals. We have people that are doing, flips, right? Or they're lending. There's mobile home parks, people even buying businesses together. So I've seen quite a range. I've honestly see things where it's 8% and it's a very not as risky type of strategy that the group is going after. So they're okay with something more conservative for less chaos, less risk. And then there's people that are the complete opposite and they want to hit 20%, 25%, but obviously with higher returns comes greater risk as well, right? So I think there's just so much personalization, and that's why you have operators that have different visions, different goals, and then they bring in like-minded people from their network that want to back that same idea.
Mm-hmm. In today's world, I feel like trust is such a hard thing to gain. So on this platform, especially when you're trying to get from strangers and all that stuff, how do people instill confidence and build trust with people who, when there's so much scamming that goes online?
Yeah, that's a great point. I mean, I think trust is, the number one component when it comes to capital raising, building these relationships, forming a club together. And I think there's quite a long journey in building that relationship and rapport before you should even ask people for money, right? That's definitely something that, we always push people to do is, your first touch point with someone shouldn't be asking them for money someone as an investor, your first touch point with someone shouldn't be giving them your money either, right? So spend that time beforehand. And I think social media definitely makes this easier as well, especially if someone is very active, talking about all the deals that they've done, all the mistakes they've learned from, how their current projects are going. I think that's a really great way to just over time, even passively build a little bit of that trust and really get to know that person better. And then what I really love about the club is it gives people time to align on a strategy and work on that together. A lot of times people aren't coming to Fractional with a specific deal in mind and asking to raise money for, 123 Main Street that they found. It's more of, I'm an operator. I really love boutique hotels, right? It's something that I've had my eyes on, and this is my buy box. Who is interested in the same strategy? Who believes in the same buy box as me? Let's go, pool our capital together, and then we'll go look for those deals. And then we're going to underwrite them together. We're going to do the due diligence together. And then we all get a say as, members of this investment club, whether or not we want to deploy capital on that deal, right? So now it's like you're also building trust with other investors, with your club leader, even just throughout the process, because you're all in it together. I think that just totally switches the process of, what capital raising even looks like, right? Like instead of me coming in where it's like, I have the perfect deal. These are my numbers. We're guaranteed to make money, which is, stupid shit that you should really never say. But I think that's how a lot of people approach, capital raising previously, right? Well, we want to bring that process just much earlier in the stage where you can actually build a team of investors who want to back you, who want to back this idea that you have, and then go work on it together.
Yeah, that sounds amazing. I mean, as you know, commercial real estate especially is such a huge team sport. It's just so hard to do everything yourself. It's very necessary to have many people doing different things, whether it be underwriting, doing the marketing, doing the capital raising, all that stuff. So just one thing I think about though is I mean typically with a commercial raise, you have the GPs who are operating it, finding it, all that stuff, and then you have the passive investors, the LPs. So on fractional, it seems like everyone is pretty active, right? So do you ever run into issues where there's too many cooks in the kitchen and things never really get progressed because it takes too long to make decisions?
That's a great question. So, I mean, with any deal, there's a lot of moving parts. And what we really care about is there a business critical role that people can get involved in and actively participate in that's also not going to take away from the efficiency of the business. So if we look at commercial deals, just taking hotels as an example, because I know both of us are very personally, interested in love with that. We just had Investor Girl Britt and Sujay launch an investment club on hotels. And there are, I think some really easy ways where people can get that active involvement. A big piece of that is the underwriting and due diligence on potential opportunities. And being able to pick a property that is 100% a critical aspect of whether an investment is successful or not, right? So, instead of saying, okay, let's get 50 people to be property managers, which I think is much more difficult, why don't we get 50 people to be involved with looking at the deals together, underwriting the numbers, and then casting a vote on whether or not they think that deal does in fact fit the original buy box that, Britt and Sujay proposed. And, because they're great operators, likely the answer is yes. People get to be involved in that process. And then they also get to participate and say, yes, right? Like Britt and Sujay did in fact bring a hotel in North Carolina that hits these metrics. It's not an airplane or a yacht or something just completely crazy that doesn't fit, right? And usually we've seen people be able to make that decision within 24 business hours, which is, I think, very effective and very quick. And then, if there are more opportunities you want people to participate in, you certainly could include them. I think for anything that is, experience-based, right? If we're talking about hotels in particular, marketing is another great one, right? Like, wouldn't you want more people to know that you own this really amazing hotel and to boost occupancy and get the word out there on social media? Well, get your 50 investors in the deal to go post about it and market it on their social media, right? Like that's another critical part of a business that everyone can get involved in that is not, super heavy lifting. We're going to go fix the toilets and things like that together. So lots of really great ways to be creative where you can get that easy win for active participation and still make it really effective.
Yeah, that sounds amazing. So I want to talk more about just like the differences between this and like a 506B or 506C. So I know you mentioned that you're able to market this anywhere on social media and all that stuff. So that totally complies with everything. Like you never have to worry about any kind of like solicitation or anything like that.
Yeah, exactly. So because an investment club is not considered a security at all, the SEC, one, doesn't regulate it, and two, because it's not a security, I mean, the SEC doesn't have rules where they say you can't talk about your business online, right? Like effectively, this club is a group of people that are deciding to start a company together where they're going to look at investments that they believe in that fits their company vision and their goals and all of that. So, pretty much all of the traditional rules around, you can't market or you can, but it's only accredited investors, none of that really applies because an investment club is not a security. Obviously, there are still stuff that you definitely should not say, like promising people returns, right? Like the moment you say that about anything, it 100% becomes a security. You can't, create an investment club and then talk about it like a security. That's not going to work. So that is something that, we help people from a compliance perspective as well, right? Like don't promise people returns. Don't tell, people on social media that they're going to be passive investors and you're going to make them money while they sleep, right? Like all of those things would make what exactly you're talking about a security, which is the complete opposite of what we want people to do because that no longer becomes an investment club. So it's really just understanding the rules of what makes something a club and active versus what turns it into a security. As long as you're not making it a security, then you can go out there, scream from the top of the mountain, talk about it all over social media.
Hmm. Yeah, fractional seems awesome. I mean, especially for your very first raise or your first couple raises, when all these huge hoops or nuances are very difficult to navigate. I think it's awesome that you guys are able to help hold the hands of the investors and the operators to make sure that everything goes smoothly. So, what kind of fees and stuff like that can you expect to see from from raising it on fractional?
No startup costs. That's a huge thing that we stand by just because, I mean, even personally for me, I got so burned the first time I raised money because, you're paying a lawyer an exorbitant amount of money before you've raised a single dollar, right? It is just money completely out of the pocket where you have so much at stake. And for my deal, we paid a lawyer 30 grand. I had 25K EMD down. And because the whole process took so long, it took more than 4 weeks. We had only 2 weeks left to actually raise the capital before close of escrow. And I couldn't pull it off. So I ended up losing all the money that I paid the lawyer plus my EMD. And I just think like that is so much on the line for the operator. So for us as a business, when we built it, we're like, we are not putting that pain on anyone. Like we only want you to, feel like there are costs involved once you know for sure you have that capital raised and things are going to work out. So no startup costs on our end. And we only make money once you actually hit your raise target. You found all the investors. Everyone is super bought in. The club is officially going to move forward. That's that's only the place where we make money. So when that happens, the investors joining your club, they pay a 3% transaction fee for us to handle pretty much all the legal setup. We're creating the LLC, the operating agreement. Everyone's money is moving in together through the platform, payment processing, all of that. That's covered in the 3%. And then we do everything back office as well. I mean, no one wants to be a full-time CPA or an accountant when they're trying to operate any of these deals. So we want to take that burden just, off of people's plates. So we do all the profit distributions. We file taxes for the LLC, and then we create K1s for all the investors in your club as well. So for that, it's $3,500 a year for the entire club. I think it's very competitive just to the cost of hiring a CPA.
Yeah, I mean that sounds amazing. And that paperwork alone makes it worth it.
Yeah.
So 3% to the club joiners, and then is there anything that's charged to the club owners?
Not really. Usually, I mean, pretty much, even if you look at the annual 3,500, right? Like that is usually a shared cost. It's just the cost of doing business, right? Like you have to do your books and you have to file taxes and get K1s. So that is usually a shared cost between, all the club members. It's basically a charge towards the LLC. We have seen some leaders, offer to pay for that on their end because traditionally, they probably would have hired a CPA on behalf of the investors and dealt with that. So there is an opportunity there, but yeah, for us, it's pretty much, cost towards the investors and the LLC as a whole. And then the operator has the flexibility on, if they want to share some of that weight.
Yeah. What's some of the biggest mistakes that you see new people on fractional make, whether that just be the new club members or the new club owners that people can just avoid?
Yeah, I mean, I think urgency is probably the biggest thing. I think, a lot of times people don't understand that raising capital, it's kind of similar to listing a house on Zillow, right? Like the longer your raise is taking, the worse your raise looks, right? It kind of starts to feel like maybe there's something wrong with your idea or, it's too risky or for whatever reason people don't want to back it, right? I think it does, give kind of a negative perception, and I've seen operators not being able to capitalize on the momentum early on while they have it. They kind of feel like, oh, well, because my closing is 3 months from now, I will just, take my sweet time with getting my investors in. And I think, it ends up creating not enough synergy because, you have early investors who were excited, they join in, and then they're just sitting around waiting and thinking, well, what's happening, right? Like, why aren't other people coming on? Is this club going to be officially made? Are we going to move forward? And then the longer it takes, then it's harder to get new investors to join too, because then they might be thinking, why has it taken you 8 weeks and you haven't raised this money, right? So I think that's where I've seen a lot of people mess up is not running their fundraising process like an actual sprint. I think it does really matter a lot to really lock in, just put in the work and get the energy, get the excitement as fast as possible and just really herd your people in, right? Like lock them in, make them feel like this thing is moving really fast and we want to move forward with something. I think that's really when you get that 1+1 is greater than 2 effect where you feel the fire and your investors feel that fire too.
Mm-hmm. Are the people who commit and say they want to invest $10,000 in a deal, they commit, are they allowed to back out anytime? Or do they have to put a deposit in and they're pretty much committed until, I don't know, say their money's tied up for those 3 months that it may take for that full race to go by?
Yeah, that's a great question. So we don't believe in verbal commitments on the platform because, I mean, people can say whatever they want, right? And then they'll disappear off the face of the planet when you ask them to actually send the wire. So we basically have people submit that 3% transaction fee as, a way to lock in their spot. And that fee is non-refundable if, the club does reach its target, everything is going well, and you as the investor decide to flake for no reason, right? Like that's clearly your fault as the investor and not the club's fault, not the leader's fault. So that really does keep the flake rate so much lower on the platform because, people have skin in the game when they click that button and say yes, I want to join Lorenzo's flip club or Lorenzo's hotel club, right? So that keeps them in. But at the same time, back to what I was previously saying, it is unfair for someone to, have their money locked in for 3 months when they have no idea where the direction of this club is going, right? So we actually introduced a policy this year where we've told everyone, you need to figure out a direction within, 4 weeks. Like your club is either moving forward by the end of 4 weeks or it's not. And I think that's, just help people be a lot more accountable when they're running a club. And it's also just given much more clarity and speed for the end investors that are joining one as well.
Yeah, that's great. And you said 3%. Is that just for the amount that the person's going to commit themselves? So it's 3% of 10,000, or is it 3% of the entire quoted raise?
3% of whatever they're committing.
Okay. Okay. Cool. That's awesome. I want to hear about some of the type of deals. I'm sure you see everything, right? So where are the most popular areas where things are being raised for? What kind of asset classes specifically? Like, what do you think is most popular right now?
Yeah, that is such an interesting question, and I've honestly loved seeing that change just throughout the years, depending on, the economy, whatever is hot then. I would say right now, private money lending is definitely something that has been very popular, especially within the last year. I think people have, found out that there's another way where you can get into real estate where you don't necessarily have to be boots on the ground, right? Like you can be on the other side of the table and be a lender and go lend to flippers, right? So that has been, very interesting, and we've seen that definitely been on the rise this last year. And then I would say more commercial as well. We've seen RV parks, self storage, hotels as well, those becoming more popular. I think, because of high interest rates and market fluctuations, and, people are trying to be creative, right? When it comes to finding ways to have appreciation while still being able to cash flow without just being squeezed to, the bare minimums when it comes to margins. So definitely seen a transition with that where we've seen more creative commercial deals on the equity side being more popular this year as well.
And are there any specific areas of the country or places where you see a lot of this, that there's most activity?
I think Sunbelt has always been really hot. I think that's probably been consistent throughout the years is, where is it easy to find good deals, and where does the regulations kind of favor the strategies that the investors want to back.
Got it. So if you had a crystal ball, you think you can see 3 to 5 years in the future, where do you think all the money should be put, or where do you think there's going to be the biggest boom?
Oh, that is a tough one. I wish I had a crystal ball. Honestly, I think it's more about staying sharp as an investor. Like I've had to pivot my investor strategy, even personally, just throughout the last 5 years. I started out with just the basics, doing single family homes, long term rentals. I mean, it worked, right? When money was practically free, and then all of a sudden it's like, okay, insurance premiums are going up, property taxes are going up, but then the rents aren't proportionally going up the same way. And, you know, especially within the last 2 years, I've had to offboard a lot of those and then put them in different places. Like I started investing in private money myself, getting into commercial deals because the world is changing, right? So I think it's hard for me to predict the future. The only thing that's within my control, I think, is being very on top of, what is happening in the present. I think, sometimes investors, they think, let me just figure it out and it will be the permanent solution. Like, in my opinion, that is never the case. Like, you have to be totally fine with iteration, with pivoting, and just consistently evaluating, right? Like, how your money is doing the work for you, and whether that's the most efficient and effective way. And I mean, people have different bandwidth and risk tolerance levels as well, right? Like, I think for me, I've had less and less bandwidth to be a super active investor where I can realistically go, asset manage 150 single family homes, right? Like that is just becoming less and less realistic and more chaotic for me, while I'm also juggling the growth of Fractional as a company. So I'm also pivoting my strategy where I'm looking for areas where there is more scalability too. So I think, yeah, the answers come from a lot of self reflection. I think that's probably the best way where you can find that crystal ball for yourself.
Yeah. One thing I love about you, not only are you a badass, but you actually walk the walk. I think a lot of founders maybe just have this idea that just comes to them, but without actually doing all these different things. Like you said, you had this deal that had gone wrong. You'd invested many times for the past 3 to 5 years. And so you know exactly what it takes to be an investor, which I think helps really makes the success of Fractional. So I want to switch up the gears and just go back to the beginning of Fractional. Like, how did this idea even come into fruition?
Yeah, I mean, that burn that I had, it was, I think it was really what sparked it all. And, initially when that deal went completely south, I honestly felt extremely defeated because, one, I lost a fuck ton of money. Like that was pretty much all the money that I had, that I put on this deal because I desperately wanted to scale my personal portfolio. And then there was also I think a lot of shame that just came with then having to call the investors that did want to back me, that did send me that money, and telling them, hey, I couldn't get the rest of the deal together. We ended up losing it. This thing's not moving forward. That really felt like garbage. And I think, probably a lot of us as entrepreneurs can relate to this. Is like you try to find peace with a defeat and maybe thinking, this might be where my journey stops, but just deep inside you, you're just fundamentally not okay with that. And I felt the same way where I try to tell myself, right, like, okay, maybe I'm not the person that gets to go bigger. Like, I should just use my own money and just buy whenever I can. But I just couldn't accept that as, the end of my journey. And that's when I try to get out of it by thinking, well, this didn't work. What do I know that other people don't? Why don't I, try to step outside of this loss and just really reflect on what's worked for me? And I used to be a software engineer before I got into real estate full time. And we were running investment clubs with a lot of my friends where we were doing this for stocks and crypto and all of those things. So that really was that light bulb moment for me where I was like, well, how come we didn't have to deal with all this chaos when it's me and my, 10 buddies, we're pulling our money together and, underwriting these different, crypto, meme coins, stocks, and trying to figure out like where as a group we think are smart investment strategies, right? You didn't have the SEC knocking at our door and asking us to create all these crazy paperwork and have all these regulations around capital raising when you're doing it in this collaborative way. So that's when I was like, like, why doesn't this exist for real estate, right? So I wanted to test out as a concept, if this was just a me issue or if other people also experienced that same pain. So we ended up building this fake website that basically described the concept of an investment club that said, right, like if you had really great operators in your circle and they had really amazing real estate deals that you could be a part of for as little as $10,000 and you could be a part of the process and you don't have to be accredited, would you jump in? Is that something that's exciting for you? And we ended up having 2,000 people join the waitlist for this non-existent product, right? And that's when I was like, holy shit, this isn't just a me problem. People want this. And, the both of us were in a lot of the same real estate investing communities and circles too. And, I talked to a lot of operators that experience the same pains of raising capital where they've had to tell a lot of people no, like you can't come into my deals because you're not accredited. And they've gotten burned with, having to keep their deals hush hush, right? Because there's all these different marketing restrictions and all of that. So it really felt like we were onto something, especially with all the data that we were getting, the pains people experience, the people joining the wait list. So we were like, you know what? This is it. Like, we have experienced the pains ourselves. We're software engineers. We know how to build this thing. We've ran investment clubs for non-real estate assets. We're the right people to go build this company. So took the leap of faith, go build it. And, I think a lot of times when you're willing to bet on it, the right things will just happen because, we got into Y Combinator and then the former senior counsel of the SEC found that we were building this and he came on to make sure that from a compliance perspective, we're doing everything right and we're going to help our customers build it right. And that was a huge game changer, right? Because the legal, the regulations, the compliance, like that is probably the biggest thing when it comes to capital raising and being able to have the guy who literally, helped write the rules at the SEC come and validate this thing and, tell the world that we're building it the right way and we're going to help people raise capital through this brand new model and not have the risk of going to jail. Like that is huge. That has been a huge moat for us as a company. So yeah, that's how it all started. And that's where, I always tell a lot of people, even if you're in some absolute shit right now, like if you're willing to lean in on it and just figure out what you have learned and what you're able to bring to the table after those pains, I think it will really help you completely unlock a different version and a new version of yourself.
Yeah, 100%. I mean, I always tell people that, and like the faster you get kicked in the nuts, the faster you can learn. And that same thing happened to me. My very first flip, thought things were going well. Everything that could have went wrong. Ended up losing about 20,000. And yeah, I mean, for a while, it felt pretty shitty. Not gonna lie, I mean, it was like that's a lot of money. I can't imagine 50,000. And then you know what? I think that's just a key thing with entrepreneurship and business is the faster you fail, the faster you learn. That's literally what entrepreneurship is. It's just adapting to change and just constantly getting better, right? And so I really commend you for doing that. Yeah, another thing I was going to ask is, how long did it take you to go from when you lost at 50,000 to actually having this, the first, I guess, funding for Fractional? Because you said that it took a little bit of time for you to reflect on everything. So when was the difference between the time from when this happened to when Fractional actually became a thing?
I would say it probably took around 3 to 4 months. Like in the beginning, I mean, I'm a real human, right? Like it takes time to heal from a pretty devastating loss and to feel like, you're ready to come back and, start throwing punches again. So I think it took a little bit to get out of that slump. But then once I was out of it, I just couldn't really keep the thought away from my head where I was just so intrigued of trying to find out if there's another way to go about it. So from there, it was just constant brainstorming. Like I honestly felt like I couldn't stop my brain from thinking about this and thinking about if there's another way. So from there, it was a lot of just talking to people, trying to learn, even seeing if, this investment club thing, does it even work for real estate? And I'm generally a more risk averse person, which is why we, also went and built that fake website to see if if this was a real problem, right? Or if it was just me. So from that whole thing, I think it took around 3 to 4 months. And then once we got that data, that validation that this wasn't just a me problem and people really would want and care and we could build a lot of impact with this product, things started just moving really fast. So we applied a Y Combinator, got accepted into that, and then the moment we were in a Y Combinator, it is like an insane pressure cooker where you're in that accelerator. You have pretty much 2 months to build a fully functional product, and then ideally you have investors or customers, right, that have been able to use your product. And then you come out of that 2 months and you're pitching to a room of hundreds of VCs to then try to find funding for your company. So that was, I think, the catalyst of moving us as quickly as possible, right? Because there's so much on the line. And if we could do it, we would be able to have a lot of success, right? It meant, VC money. We could hire people. We could, spend marketing dollars and explore different ways to make the product better. So that really got me and my co-founder just, super hyped up, and we were just grinding like crazy. And it was also during the pandemic. Like there was honestly nothing better to do than just, sweat and grind on our baby, which, we were just so in love with. So things started moving very quickly the moment, Y Combinator started. So by the end of the 2 months coming out of the program, we had our first 10 groups of people that bought properties together, mostly with their family and friends. And then we raised $5 million for the company coming out of Y Combinator. And that, basically snowballed into more growth. And yeah, here we are.
That's awesome. What's been some of the biggest learning lessons from, I guess, the early startup days or just growing it and scaling it?
Yeah, I mean, I honestly find it so relatable even to investing as well. It is like you constantly just have to be okay with pivoting and iterating. And I think, Lorenzo, the first time we met each other, you probably were only aware of the first, concept or fractional, where we were actually more focused on the end consumer and not the operator. So, we were more focused on bringing in people that, had that $10,000 and trying to, even match make them with operators on the platform and trying to, bring more opportunities to them and seeing if they would be able to find, other homies and friends in their network to go do a deal together. So that was the beginning of, what Fractional looked like. And we spent a lot of love and energy. We try to see if we could even create almost like a Y Combinator, but for, early real estate investors that had a lot of passion, where, the idea was, well, if we put a lot of really ambitious, aspiring real estate investors in a room together, can they go build a beautiful portfolio? So a lot of it was on that. And we found that scaling the consumer side of the business, it was not as easy and not as scalable as we had thought. And around the same time, we were seeing a lot of opportunity with, operators that did have the experience, who already had a network, especially with people that are, leaders of a community, influencers, and, they have a network of just raving fans that are just so eager to jump in on a deal and do business and learn and earn together, right? So as a founder, we were pretty much at the crossroads where it was like, do we give up on something where, we've poured our blood, sweat, and tears into for the last 3 years on the consumer side, and focus more on the operator, right? And I feel like part of me was even a little bit emotionally attached, right? Because it's like, that was the baby that we spent so long on growing and nurturing it. And it wasn't like it wasn't working. It just wasn't blowing up at the pace that, we really wanted it to be at, for operating a high growth startup. So, ended up cutting the cord there, and making a pretty big pivot on, the business development and strategy, and to focus on the operator. And it makes me reflect, even as a real estate investor too, right? Like that crystal ball thing we talked about is like, something might have worked, or it's kind of working. You might have put a lot of effort into it. It doesn't mean that's the right answer right now. And I think part of what it takes as being a successful entrepreneur is knowing like what are the right tools that are going to give you the right leverage at that current point in time. And yeah, that was a hard move, and I'm so glad that, we leaned in and made that transition. And I really just take that mindset into everything I do right now. Is, yeah, sometimes you gotta just, make the hard decision, pull the plug, make that iteration, make that change, because that could be the thing that's gonna unlock you to something way more massive.
Yeah, just gotta keep making pivots and changing it up. Um, so I just want to switch up gears. I know you're mentioning that obviously the people who have the best track record, maybe have all these big networks, are most successful on fractional. What advice would you give to people who are newer, haven't done their first raise yet, or maybe have just done one or two, or maybe other traits that you see from other really successful people who have used fractional, have gotten quick raises and all that stuff? Are they doing a lot of networking? Are they doing their own marketing, podcasting? Like, what's the things that you see from characteristic wise of people who are most successful?
Yeah, absolutely. I think it goes back to that trust element we were talking about, right? Trust is the number one thing when it comes to capital raising. So I think it's like, you should always be capital raising before you're even capital raising. Like, that's the mindset that you should have. If you've never done it before, that's okay, right? Like, before you get yourself to the point, today, you should already be telling every person you know in your network about every single deal that you're doing, right? Because at this current point in time, you're not asking for anything. You're just sharing your wins, your losses, what you've learned, what's going on. And all of those things, it helps people understand who you are as an investor. And that's what in turn builds trust, right? Then when you actually do need capital and you do want to bring them on as a partner, you're not starting from scratch, right? You're already talking to a very warm lead. Hopefully they're already an investing friend at that point, right? Where they know who you are as a person, they've seen how you work, and getting them to say yes as a warm friend is going to be so much easier. So I think, tell people your journey yesterday, right? Like, do it as early as you can, because that will make raising capital, that will make doing your deal, your first raise, so much easier. And I mean, networking never hurts, right? Like, even if you never raise capital, I'm sure you'll win so many amazing connections that are going to help you unlock your next thing, whatever it is, just from having these conversations and telling people your journey. So I honestly love that, you have a podcast. I feel like I always follow along with, everything you're working on. And that's, the whole point of these relationships, right? It's really what helps us build a more well-rounded circle, lets us tell our story, and it really gets the word and the trust and those relationships out there that can be the catalyst of a lot of new things in the future.
Yeah, couldn't agree more. Just like you said, share everything, the wins, the losses, share day in the life. This is what I'm doing today. This is how I'm looking for a deal. All these different things. You don't have to wait till the end product is done, because when you're showing the daily things leading up to that thing, it makes it a lot more relatable for the person who may not be having, who may be struggling to make even just that first step. So just showing those steps can make it a lot easier for other people to relate. So do you have a favorite mentor or people that you look up to for raising capital? Like, who's been the most influential people in your life?
Pace Morby is a huge mentor of mine. I am honestly just so in awe with everything he does. He he freaking executes always, which is so impressive. And two, he is truly someone that leads with his heart. I think that also just speaks volumes to who someone is at the end of the day. A lot of times, like I always really like this phrase where, you bet on the jockey and not the horse. I think that means so much to me because I mean, real estate is pretty real. Like, I've been in deals where I had the best intentions and things just, didn't pan out as I had hoped. And I'm pretty conservative at underwriting too, but, things change, right? And I think if you're a good person and you lead with your heart and you care about the people you're working with and you care about the community that you're a part of, you will do whatever it takes to make people whole and make things right and work with everyone to figure out what the next moves are. And I think that is just so important, and Pace is one of those people where I've seen him do that time and time and time again, even if it means maybe he has to come out of pocket for something that didn't work out well, right? And or he always has a plan B in place, and he's always willing to give and give to the community again. And I mean, he literally helped a homeless person get her first home. Like, I've never heard of anything as crazy as that, right? Like, so that is really the mindset that I want to lead with, is this abundance mindset. So yeah, I think Pace has been phenomenal, and there are just so many amazing things you can accomplish when I think you're able to operate in that way where you give first, and you take care of people around you. And I think karma will bring a lot of great things for people that operate like that.
Yep, couldn't agree more. Love pace, and yeah, just give into the universe, expect nothing in return, and everything will come back tenfold.
Absolutely, 100%.
Yep. So I know that fractional is your baby. I'm sure you want to build something else in the future. What excites you most? Like, what's the next thing? I know this is all your focus right now, but if there's something else that you can build in the future, what would it be?
Ooh, that's an interesting one. I am generally a very impact driven person. So I think it would honestly have to be something where I feel like, I have a unique insight on, where I feel like I'm the person that can deliver that, exponential impact that no one else can. Um, I don't know the exact answer yet, but just because right now, like, I am so heavily involved in real estate investing and capital raising in, a financial technologies product, I feel like, in the life after fractional, it would honestly probably be in a similar esque space, because that's where I'm picking up so many insights in, my journey today. So I don't know what that exact thing is, but I find it very powerful to, be that really unique vision and something where I know really well. So yeah, I'm looking forward to figuring out what that will be eventually.
Awesome. Well, Stella, I appreciate you coming on and bringing so much value to everyone. I know you're really changing the game, being a disruptor, and just changing the way that people raise capital and invest in real estate. So if the people want to get a hold of you, what's the best way for them to do so?
Well, I am always active on Fractional, so definitely find me there. And then Instagram is another great place. My handle is Hella Stella, just to keep it California for everyone. And
Cool.
yeah, definitely, love to connect with operators that are scaling up. And yeah, let's go crush it and build a bigger and brighter future together.
Let's do it, baby. All right, everyone. Thanks for tuning in. As always, keep growing, keep taking action. See you on the next one. Peace.